Hello, everybody. Welcome. Let's get started. Tesla stock is down 2.3%, $350 per share. Overall markets are down. Dow down 1.5%. That's pretty large move for Dow Jones. Nasdaq down 0.9%. S&P 500 down 0.8%. Russell 2000 down 1.2%. Let me know if the audio quality on YouTube is good. Looks good to me. 10-year treasury yield is down a couple basis points. The yield curve is down a couple basis points across the board. Crude oil is up 1% to $73 per barrel. Natural gas is down 5% today. This morning, we got initial weekly claims, 219,000, pretty much as expected. A slight uptick, but nothing. This is very normal. Actually, it's pretty flat. It's been pretty flat over the last several weeks. Continuing claims are remain about 1.9 million. Philadelphia Fed index for February came in at 18.1, lower than the expected 20.5, and lower than last month's 44. That's interesting. And leading indicators for January came in at negative 0.3%. Let's read. We have a lot to go through today, so settle back. Let's read through this Reuters article. Wall Street falls as declines in Walmart, Palantir hit risk sentiment. Wall Street's main indices fell on Thursday, with the S&P 500 off record highs as a sell-off in heavyweight retailer Walmart, and tech firm Palantir hit investor sentiment while the market assessed latest tariff threats from U.S. President Donald Trump. Walmart slid 6% after the world's largest retailer forecast sales and profit for the fiscal year ending January 2026 below analyst estimates, and anticipates inflation-weary consumers to pull back after several quarters of solid growth. Walmart's results show that consumers are tightening their wallets. It makes people think this is a delayed reaction to all the Fed rate hikes that have been going on over the past year, said Michael Matusek, head trader at U.S. Global Investors. The company's forecast dragged down other major retailers such as Target, Costco, and Dollar Tree, which fell between 1.4% and 5.6%. Palantir, which provides government with services such as software that visualizes army positions, shed 9.7% after the Pentagon said on Wednesday it was looking at potential budget cuts for the fiscal year 2026. Matusek also said that Palantir's declines, coupled with Walmart's, are inducing people to sell out of fear. Most mega cap and growth stocks trended lower, with Amazon.com and Tesla down more than 1% each. The market wants to give me 1 second. I'm going to continue. Give me 1 second. Most mega cap and growth stocks trended lower, with Amazon.com and Tesla down more than 1% each. The market is also reacting to Trump's Wednesday announcement of fresh tariffs over the next month or sooner, adding lumber and forest products to previously announced plans involving duties on imported cars, semiconductors, and pharmaceuticals. Since returning to office 4 weeks ago, Trump has imposed an additional 10% tariff on all imports from China. He also announced and then delayed for a month 25% tariffs on goods from Mexico and non-energy imports from China. Last week, he unveiled plans to slap reciprocal tariffs on all countries that have tariffs on U.S. goods. Separately, minutes from the U.S. Federal Reserve's January policy meeting showed on Wednesday that Trump's initial policy proposals raised inflationary concerns at the central bank. On Thursday, Data showed that the number of Americans filing new applications for unemployment benefits increased moderately last week, suggesting that the labor market remained on solid ground. 8 of the S&P 500's 11 sectors traded lower, with financials leading declines with a 2% fall. US listed shares of S&P 500 11 sectors traded lower, and financials leading declines with a 2% fall. US listed shares of Alibaba advanced 7.4% after the Chinese e-commerce firm topped expectations for third quarter revenue. Hasbro jumped 11% after the toy maker beat quarterly profit and revenue estimates, while Baxter International gained 7.9% after the medical device maker forecast 2025 profit above estimates. Declining issues outnumbered advances by 1.7 to 1 ratio on the NYSE and 2.2 to 1 ratio on NASDAQ. S&P 500 posted 8 new 52-week highs and 3 new lows, while the NASDAQ composite recorded 47 new highs and 105 new lows. Great. Let's get some updated data on these companies real quick. Markets are trading at about the lows of the day. Tesla down 2%. JP Morgan down 4%. That's pretty amazing. Financials were supposed to gain from deregulation. All financial stocks really surged in recent months, on expectation of Trump's deregulation talking points. And the fact is, a lot of those things are going to come about years down the line, not immediately. And I think the stocks ran ahead of themselves. We then saw Warren Buffett sell Citigroup and substantially reduce some of his other financial stocks. So, to the extent that you follow Warren Buffett or you believe in, his methods of investing, then that's something to note. Obviously, he has record amounts of cash today. Interesting topic. At the same time, at the top of our screens is a 4-minute clip from 9 years ago. 9 years ago, Warren Buffett gets asked about autonomous driving and what the impact is going to be on the world, on his companies, especially Geico, the insurance company. And he gives a very reasonable answer. He then says they are a long way off, after which Charlie Munger and Bill Gates agree with Warren Buffett that autonomous driving is a long way off. And this is the time, 9 years ago, when Elon was first time to talk about FSD and parking lot to parking lot from LA to New York, autonomous driving by the end of the year for 9 years in a row. So Warren Buffett, it's just a fact that Warren Buffett has been correct and Elon Musk has been wrong and has raised billions and billions of dollars, tens of billions of dollars on that promise. Interesting, something to keep in mind. All financial stocks are down today. Capital market stocks are down as well. Morgan Stanley down 5%. Goldman Sachs down 5%. Asset management companies are down as well. KKR is down 4%. American Express down 3%. MasterCard down 2%. Visa down 2%. Walmart down 6.5% today. Dollar Tree down 5%. Costco down 2%. Industrials are also down. Deere & Co. down 3%. Let's see what else. Utilities are down 5%. That's interesting. In technology, Microsoft is up 0.7%. Microsoft recently had a announcement around quantum computing, which we can read about today. So both Microsoft and Google made announcements recently around quantum computing. So let me take a quick note down and we can look into that a little bit more. And its impact on NVIDIA as well. Chip makers, NVIDIA is flat today. Broadcom down 1%. Intel down 4%. Texas Instruments up 3%. It's a mixed bag. Software application companies, Autodesk, Salesforce down a couple percent. It's a risk off kind of day today, very much so. Healthcare stocks are up about 1-2%, and oil stocks are up 1-2% today. Pretty much everything else is down. Um, yeah, especially industrials. Travel is also down. Consumer Secure Travel Services, Booking Holdings, Airbnb down 3, Royal Caribbean down 9%. That's really interesting, actually. That's really interesting because the one part of the economy that's supposed to be doing well right now is baby boomers traveling. So Royal Caribbean being down 9% is quite the change of tone here in markets. Philip Morris is up. Altria is up 1-2%. Pepsi is up. Yeah. I wonder why Walmart is down. Let's take a look at that because on a consumer kind of um, you know, defensive kind of day, you would expect Walmart to be up. But Walmart announced earnings, so let's see what they said. Let's take a closer look at Walmart. All right. Hasbro stock soars as CEO says Trump tariffs are manageable but unwelcome. Okay. Walmart CFO defends its conservative guidance as Wall Street remained high on the stock after its plunge. Let's look at that. I think Walmart gave a weak guidance for the next quarter, so that's probably why the stock is down quite a bit. And let's take a closer look at this CFO comments. Walmart CFO is looking to assuage fear among investors that 2025 won't be as strong as in recent years. Quote, they're conflating our guidance with maybe suggesting that we're feeling like things aren't as good or the economy is softer, John David Rainey told Yahoo Finance over the phone. Quote, let me be very clear. That is not the case. We feel really good about how we're doing. End quote. Shares of the retail giant sank more than 6% in trading on Thursday after it put forth conservative 2026 fiscal year guidance, which it has done for the past 2 years. It projects net sales to increase between 3% and 4%, in line with a target of 4% annual sales growth it laid out years ago. However, the guidance missed Wall Street estimates of up to 4.2%. It's also below its 2025 pace, where sales grew 5.6% to $682 billion. Rainey said that the company performed well in January, but with uncertainty regarding tariffs and the macro environment, the team has taken a kind of a prudent approach at this point. The retailer also won't benefit from the same inflationary boost to its top line as it did the past several years, per Rainey. Overall, quote, there's nothing to read in between the lines here about some concern on the economy or our business, end quote, he added. Shares of Costco, Dollar General, Dollar Tree, and Target also fell on the news Thursday. Joe Feldman of Telsey Advisor Group told Yahoo Finance that expectations were running high into Walmart's earnings report, so despite strong fourth quarter results, they may have fallen short, and the profit guidance for the coming year was below as well. But the company still sounded quite solid, and newer businesses are growing rapidly and contributing to profits, the analyst said. Sales of Walmart Marketplace grew 34% a quarter, while Walmart Connect advertising jumped 24%. TD Cowen analyst Oliver Chen noted that the big story here is the price to earnings multiples are very high, which raises expectations of growth. Walmart is currently trading at a forward PE ratio of 38 times compared to a 3-year average of 24 times. Despite the stock drop, quote, we're encouraged that this is conservative and in line with the past in terms of how Walmart guides, and this was a solid quarter, a very stable consumer, end quote, Chen added. Davidson analyst Michael Baker told Yahoo Finance the stock's dip is a good buying opportunity as the stock still has room to run this year. Aren't they all? Buy the dip, analysts say. Okay, well that explains it. That explains the sharp drop in Dow Jones because Walmart is a Dow Jones component, and Walmart's stock price is $97 per share. Um, in the last year, Walmart has gone up 66%. In the last 5 years, in the last 2 years, the stock has gone up 150%. So some pullback. PE ratio of about 40, forward PE ratio about 37, 38. PEG ratio of 3.6 times. Price to book of 9 times. Price to cash flow 46 times. Yeah, these are still very elevated ratios, of course, historically. 0.8% of the outstanding stock is short. Market cap of $782 billion. $20 billion income. Yeah, that's double, more than double of Tesla's. And the market cap is 800 something billion. Yeah. Okay. Let's look at Palantir. I mean, Palantir is just a very hyped, very volatile, manipulated through options, just like Tesla. And it's not surprising to see Palantir dropping 8, 9, 10, 12% every now and then. In the last couple of days, Palantir dropped about 22%. So this is par for the course. It has a 500 plus P ratio. It's unfortunately, some of these stocks they don't represent the true value of the companies, and investors should be aware of that fact. Luce,
Hey, what's up, everybody? How are you? How are you, Yaman?
I'm good. How are you?
All good, thank you. So, I had a question. I thought that today market was down because Trump is basically allying himself with Trump, which might cause some kind of geopolitical tensions with the US. What do you think?
Yeah, I mean, it's hard to kind of nail down what the exact reason is when the markets move down, here and there. But generally speaking, the markets are very overvalued, and there's a lot of excess animal spirits I see in many single stocks, in crypto, and many other places as well. So I'm not surprised that the volatility has increased quite a bit. All right. Any other question?
Well, I was curious about Palantir because I know that at some point you were short in it. Did you cover the short, or what is your opinion on Palantir in general?
Yeah, like I said just now, Palantir is an overvalued company. It has all the markings of a bubble, and the value of the company is nowhere close to what it is trading today. Potentially it's going to be an important company in the future, but it just has a lot of markings of a bubble that is down 22%. So that's kind of expected. This kind of volatility in bubble stocks is expected. So, all right. All right. If there's nothing else, Lucia, you can switch back to listener mode. This is so funny. Elon Musk tweeted. Okay, yeah. I mean, look at this. This is so crazy. This is so wild. Such a shame. I'll pin this at the top. You can see it in the picture. Elon Musk's tweet. He says, unfortunately, community notes is increasingly being gamed by governments and legacy media. Working to fix this. It should be utterly obvious that Zelensky-controlled poll about his own approval is not credible. If Zelensky was actually loved by the people of Ukraine, he would hold an election. Elon does his own polls, and those are obviously controlled as well. So, um, what a joke! What a shame! What a disappointment! Any questions, comments? Please request to speak. If not, we're gonna take maybe a little closer look at some of these earnings announcements. I also have a couple other things to discuss um, about Tesla. So I have some time today. We can take our time. Just give me 1 second, please. Maybe Henry can come up and give us an overview of technical analysis for Tesla. Okay. Let's see what else. Markets are turning down. Dow Jones is doing and making another low of the day, a new low of the day. S&P 500 is getting there as well. Walmart forecast. Man, I want to hear more about this forecast that's kind of shaping markets. That's a hell of a forecast, whatever they said. Higher egg prices drove up inflation at Walmart grocery revenue. It's another joke that Trump used to say, I'm going to bring down inflation on day one, egg prices, blah, blah, blah. And it's just egg prices are making more records. Higher egg prices is an issue US President Donald Trump spoke about often during his election campaign last fall. Boosted Walmart grocery revenue, the world's largest retailer said during its earnings briefing on Thursday. Walmart said its grocery revenue rose by mid-single digits in the quarter through January 31, and Walmart earnings presentation showed that egg price inflation was baked into the increase. Egg prices had been rising as bird flu or avian influenza has hammered egg production in chickens. There will always be some anomalies like what we're seeing right now with eggs as a result of avian flu last fall, Walmart's CFO, John David Rainey, said on the call. Those things tend to work themselves out over time, so we don't have a large inflation number planned into this year, he said, referring to Walmart's outlook for its current fiscal year. Walmart caters to price conscious shoppers courted by Trump, who are up in arms over the rising price of eggs after years of inflation fatigue. Many Americans are now bracing for even higher prices on a wide range of items if Trump implements tariffs on goods from Canada and Mexico. In November, Walmart said high tariffs could lead to increased costs for our customers. I mean, this is exactly what I said too. Trump is coming to the table with the same game plan as he did in 2016. And back then, inflation was very low. The Fed was struggling to bring up inflation. Today, the opposite is true. So when the game is the opposite, you can't come up with the same game plan. And we'll see. I highly doubt that Trump will be able to do much of the things that he promised. The virus has wiped out more than 156 million chickens, turkeys, and other birds nationwide since the outbreak in poultry began in 2022. Losses of laying hens has slashed egg supplies, sending prices soaring and prompting retailers to restrict purchases and restaurants to raise prices. U.S. diner chain Waffle House added 50-cent surcharge for every. Oh my god! Just go to Costco. Go to Costco. Buy your eggs at Costco. Great prices. Literally everything I buy from Costco has the best prices. I could only find one thing that Costco had the same price as the place I used to go, which is also this kind of like a discount place. And that one, peanuts. Um, Costco's peanuts are much more delicious. So even at the same price that I could find one item, the product was better. Anyway, social media posts show that retailers, including Costco and Trader Joe's, were restricting customers to purchase only a limited number of egg per packages due to limited egg supply. Yeah, exactly. And that's how I think that's in part why they're able to charge I think about $8 for 24 eggs. So a website for Wegmans store based in New York State showed that it currently allows shoppers to buy up to 10 cartons of a dozen eggs or 18 count eggs with a maximum of 180 eggs. With supply fluctuating nationwide, prices are rising due to avian bird influenza and strong demand. While prices will continue to shift, we're committed to keeping our prices competitive. Okay. All right. We still need this forecast by Walmart that's moving markets. Walmart reports strong Q4 but warns profit growth will slow. I mean, that's the story of the day, really. In these markets, you need profit growth, revenue growth to really accelerate to support these extreme valuation multiples that have been going on in the markets for the last year or so. And the revenue, I mean, the growth is really stalling. So we've seen GDP growth numbers revised down as well in recent weeks, currently at 2.3%. It was as high as 3.9% 2 weeks ago for Q1, seasonally adjusted, quarterly percentage change, real GDP growth. Real GDP growth for Q1, but it's seasonally adjusted annualized rates came down from 3.9% to 2.3%. And we also saw a massive last minute revision downward to the Q4 GDP as well. So the trend here is not good for the growth story. And the one kind of saving grace of the markets today is that unemployment rate remains low. The UE3, the often headline unemployment rate, let's look at that right now. That is at 4.0%. So this is a historically low number and actually came down from 4.2% a couple of months ago. So, but it's also up from 3.4% from April 2023. So it's low, but it's moved up in the last 2 years, except for the last 2 months. So it's volatile, but it's kind of like that's why I think people, and I agree, the economy is kind of on a shake ground right now. And so we'll see what happens. But I think the Fed is a little too late in cutting rates. But I guess we shall see. If you look at these egg prices, people aren't feeling it. Obviously, Henry says in a minute he's going to come up. Oh, there you go, Henry. How are you?
Hey, yeah, man. How's it? How you doing?
I'm doing well. Would
That's
you like to give
great.
us an overview of about how you feel about the markets, technicals, Tesla?
Sure. Um, I think everyone is kind of wondering why the markets, in terms of the index, besides today, it's down, obviously, but before today and before Palantir, why it's been, drifting higher and higher and higher. From what I hear. It's when you look at like the reports, like the commitment of traders reports, it's I think the CBOE publishes it, but I saw it somewhere, and the person who actually provides reports on it, he organizes so it's more visual than just a lengthy text file per se that you could download. He's basically saying that institutions and retails, so institutionals move slower because the amount of money that they manage, and retail tends to move faster. Um, and what he's seeing right now is that they're converging, meaning um, institutionals are not selling as retail is buying. Usually they work in the opposite way, where they sell into strength to retailers, and the retailers sell and puke on the opposite side where they pick up. That's the normal trend that he sees, but he sees right now that we're in that period where there is that trend isn't there. So we're kind of like diddling in the middle. Uh, as far as why the indexes are so resilient, I just simply see it as rotation. The big money has to keep the money, the assets flowing. So on days where their tech goes down, it goes into let's say consumer non-durables, um, and so forth. If you look at the S&P 500 and the trend for the average stocks above the 200, the 50-day, the 20-day, they have all been trending higher. The one that I take a look at the most is the 20-day, because that's so as a trader, what I like to do is, and I'll share this. I like to share this with your audience, Yaman. I reiterated in the past. I have to reiterate again today is that your time frame is so important. So as a trader, that being said, as a trader, I look at the 20-day and the 10-day. I buy into the 10-day when it gets over it, and I sell into strength in the 20-day. So that being said, what I see on the S&P 500 stocks above the 20-day moving average, it's right in the middle again, meaning we're diddling in the middle. So there's a confluence of data, the commitment of traders reports, the average number of S&P 500 stocks above the 20-day. You can even see it in Tesla stock right now. So I posted the day before and yesterday that I saw that market makers were not looking for liquidity because of what I can imagine a large institutional orders. We already saw that last week, I think. There was a big flush. Um, what I'm seeing recently, just in this week, is that there's lack of liquidity and the market makers are hunting for that liquidity. Whether it used to be last week, it used to be in any liquidity level, there used to be easily 50, 60, 80,000 shares sitting on the bid or the ask. This week, it's complete, like there's no sale going on. There's like 10,000, 12,000 shares sitting on the bid. And that's a large trader. That's not even institutional size. Um, and these market makers, I can see they're drifting towards that liquidity, not to make markets, but they need to move the market somehow. Without their involvement, I can see it just moving $1, $2 up or down, and no one's making money on that side of the fence if it just moves like that. So in terms of options, exchange fees, and so forth, the whole gamut on the other side of the fence. So what they're doing is moving the markets, and it's easier for them this week, I feel, because the comfort zone from an options open interest plus a volume traded perspective. So in times like these, volume is equally, if not more important than open interest. And the open interest is consolidated between the 350 and the 360. 370s came into play just yesterday. But I feel that market makers are very comfortable in this range this week between 350 and 360, even based on options flow and activity. Um, what I'm doing, I'll just close it out because maybe some of your viewers are saying, yeah, he's talking a lot, but what is he actually doing? Um, what I've been doing is I've been taking my profits from other positions that I've had. For instance, Deere, Boeing, uh, Wind Resorts. Um, and I haven't put my own principal per se into Tesla, but I've been taking the profits that I've made and started a tier one starter position in Tesla when it went down into the 320s. So I didn't catch the bottom, but probably I got the chunk of it, the first half of the tier one, around 328-ish, around there. And then I completed the second half yesterday. So am I comfortable with it? I'm never comfortable with Tesla. But is it a good risk reward with the the house's money? Yeah. Meaning if Tesla, so my cost average for my tier one would be approximately 310-ish to 315, around there. I'm not doing the math correctly. It's just a rough guess, but that's just to give you some insight as to the profit, the cushion that I have, plus the little bit of, I don't know what percentage of it is the for tier one is my principal money. So it's a combination of both. Uh, Long story short, there's cushion involved with that tier one position. It's not just a straight out cash outlay from new funds or my cash balance. So
Okay.
yeah.
Thank you, Henry. So essentially, on the market level, you're seeing low liquidity, and Tesla, you expect stable prices between 350 and 360. Is that a fair summary?
Yeah, the low volumes is really focused on Tesla. That range is also regarding Tesla. Other stocks are just, I would say, normal, Yaman, in terms of about liquidity flow. The exception being obviously Palantir. And Palantir, I just want to mention that because I know you're short on it. This is the control bar, not the gap down today, but yesterday. That was the control bar I was mentioning. And we wait for that control bar. You put a 50% fib retracement on it, and this is just really generalizing it without seeing any liquidity flow, level twos, nothing else. Just in terms of really general guideline, you slap a 50%, which is around 118-ish, and anything below that it is good for to continue to be short. Any close, so that a daily close above that level, that 50%, which is around 118, it's starting to kind of, you want to probably mitigate your losses or start, reducing the position. You don't have to make it all zero or
Okay.
100% in.
Okay. Sounds good. Thank you very much.
Oh, you're welcome, Yaman.
Yeah. Quite. I mean, there's a lot of big moves. It's not just Palantir. Like today, Palantir is down, obviously, in the last couple of days, down 20% plus. Axon is down as well. Carvana is down 15% today alone. It was also down yesterday. And, if I look at Carvana right now, has 10 million shares traded at $250 per share, you're looking at $2.5 billion traded today in Carvana already. And that's going to get to 3-4 billion by the end of the day. So that's just in one day. That's incredible, you know? Um, yeah, that's wild. And, supposedly they put up record margins and stuff. So it's interesting, I think, that these companies, I mean, even a company like Walmart is dropping so much, even though the CFO is going interview by interview saying, we feel good about our results, we feel good about our position, etc. But the market valuations are way too high. Companies like Rivian still survive, like zombie companies. There are thousands of zombie companies today that shouldn't be around. And I think until those companies fold, we're going to see the Fed having to be restrictive. That's part of the excess in the markets is companies like Rivian shouldn't be around today. These are companies that burn money, even on the gross margin basis, even on the contribution margin basis, which is like you're miles and miles away from ever being profitable, and you're never going to be profitable. And so, but they raise billions of dollars, tens of billions of dollars. I mean, even Tesla. When you look at Tesla today, according to Troy Teslike, Cybertruck is not contribution margin positive or gross margin positive. I'm not sure about contribution margin, but Troy says Cybertruck is not gross margin positive today. So that's incredible. That's so incredible to me because Tesla is having to discount now Cybertruck prices. And, companies like Palantir or, Carvana, they're trading at hundreds and hundreds of times the PE ratios. Things like Bitcoin, just complete, nonsense. Trading at about, I think the market cap came down substantially, but I'm not sure what the current market. Let's see what the current market cap of Bitcoin is. $1.9 trillion. Actually, I think it's less than that. Let's see here. If I can find. All right, here we go. Total crypto market cap is $3.2 trillion today. Bitcoin is at 1.9 trillion. So almost 2/3 of crypto market cap is Bitcoin. And then you have Ethereum at $330 billion. So together they make up about 2.4 trillion of 3.2 trillion market cap. And then you have just nonsense, XRP. I think some of these are kind of like US dollar pegged stuff, like Tether, I guess, is a US dollar peg stuff. So, I guess it is what it is. But like Solana, I think was the one that was pushed by our current czar of AI or whatever. So just complete nonsense, most of this stuff. And there's like thousands of these things now. 10,000 cryptos, 11,000 cryptos. Trump is issuing his own meme coin. Like the United States president issued his own meme coin and swindled people out of billions of dollars. That's incredible. Argentinian president did the same thing, and now he's being investigated and whatever, which obviously Trump isn't being investigated because of it. But just like some mania in the world right now. And then on the other hand, you have Doge, who says they saved billions of dollars, but then it comes out and they exaggerated one of their savings by 3 orders of magnitude, 3 zeros. It was supposed to be 8 million, and they said it was $8 billion of savings, and then end up correcting themselves or whatever. I'll pin this at the top of our screens if you want to take a look at it, because obviously you're not going to see these things being fed into your feed. What a shame. Let me see if I can find this thing. There you go. at the top of our screens. Doge claimed it saved $8 billion in one contract. It was actually $8 million. The biggest single line item on the website, Doge website of Elon Musk's cost-cutting team appears to include an error of 3 orders of magnitude. That is insane. That is wild. That's crazy. Another tweet on the topic. Elon and his team went back and changed this line item in the FPDS system to match his $8 million fuck up after getting called out. Meanwhile, the USA spend record still shows $8 million, and the initial FPDS file can be seen on archives as $8 million. They are literally altering protected government records to cover their incompetence. Also proven that this was real and they really fucked it up. But this is straight up criminal. That's so crazy. One of the replies says that would be seemingly violation, which makes it a crime for a custodian of public record to willfully conceal or falsify that record. A government employee who knowingly alters official contract records runs afoul of that law, which carries up to 3 years imprisonment and removal from office. Yeah. But of course, you're not going to hear this from Tesla bias influencers. Another thing that you won't hear from bias influencers. Actually, let's hold on. One of the Elon fans is up here. Mr. Pringles, go ahead. Henry, can you see Mr. Pringles? Mr. Pringles, go ahead.
Hey there, Yaman. Sorry, just been listening, having problems with my phone.
Okay. Do you have anything to say?
Nope, not at this time. Sorry to bother you.
Okay. Another thing that you won't hear from bias Tesla influencers is at the top of our screens. NIO has made quite a bit of progress on battery swaps. So we have talked about in Tesla Live about how the charging network or charging situation is really what's preventing the masses from going from ICE to EVs. And instead, people are going into this hybrid bucket that Toyota just masterfully manipulated people's range anxiety into profits. And hybrids are taking off around the world. And now, a step further, extended range EVs, EREVs. EREVs are somewhere between hybrid and like traditional hybrid and BEVs. They have larger batteries, but smaller batteries than pure BEVs. And they have a gasoline engine in the front, a small gasoline engine in the front. So they're more BEV than ICE versus traditional hybrids. But they take care of people's range anxiety who says, where am I going to charge it? They're kind of worried about charging on long trips or whatever. So EREVs are taken off. Traditional hybrids are also taken off. And NIO, however, seems to have solved the battery swap issue. And NIO has been at this for years now, many years. And now today, with the latest version of stations, they can fully automatically switch batteries in 3 minutes. I mean, that's faster than going to the gas station. So let me just read this tweet that's pinned at the top of our screens. NIO today swaps batteries fully automatically in 3 minutes. As of February 2025, NIO operates 183 battery swap stations in Shanghai, providing over 9,000 swaps daily. The company's CEO, William Li, announced that these stations are nearing profitability. So if you look at one of the replies says, well, they're not profitable. Well, superchargers weren't profitable either. And now they are. And the same is going on with NIO. According to their CEO, they are nearing profitability, highlighting the growing acceptance and efficiency of battery swapping services in urban areas. CATL, the world's largest EV battery maker, announced plans in December 2024 to establish 1,000 battery swapping stations across China in 2025, including regions like Hong Kong and Macau. Their long-term vision includes expanding to 10,000 stations in collaboration with partners aiming to make battery swapping as convenient as traditional refueling. CATL has co-developed 10 new EV models equipped with swappable batteries set to launch in the coming months. This initiative reflects a growing industry trend towards standardizing battery swapping technology. So, CATL is now in on the game, and CATL is obviously a very large, it's the world's biggest battery maker. Even Tesla buys batteries from them. So it's a credible source as far as I'm concerned. And they're doing 10,000 stations in the longer term for battery swapping, something that Elon said would never work. And the same thing with LiDAR. Elon said LiDAR never works. And yet we're now seeing BYD and other Chinese automakers putting LiDAR that now costs about $100 on millions of cars, offering better ADAS systems than Tesla FSD. So Tesla bulls are focused on whether Tesla FSD is going to get approved in China. But Chinese automakers already have ADAS systems that are better, both on the highway and city driving. And all you got to do is look at some of the YouTube videos. I'll pin one of these at the top of your screens and you can watch it for yourselves how good Chinese ADAS systems have become. Um, so it's really a non-starter for FSD to even be approved in China at this point. So FSD, in my mind, has failed to generate demand for Tesla, and I think people or Tesla bulls should kind of mind the fact that the Chinese has been able to not only replicate it but improve it. At the top of our screens is the link to Kyle's video. This video has been seen by I think about 1 million+ people already, and the only people who don't talk about it is Tesla bulls, which is quite interesting. And on top of that, we're seeing the same thing on Optimus front. Chinese, there are hundreds of Chinese players doing humanoids. Unitree being the biggest one. The CEO of Unitree, Xingxing Wang, posted a dancing video of Red Note against the hype that the previous video was AI or CG generated. The dance is performed before a mirror and with sound, which makes it 100% real. Real cool demo. And this is also on my profile. You can see these FSD videos or the autonomy videos, autonomous driving videos from China, and the humanoid videos from China as well. And so that kind of raised the question, where is Tesla's supposed advantage? And the fact is, Tesla doesn't have a focused leader. The leader is focused right now. The CEO is in the White House and focused on other things. So until that changes, I don't really see how Tesla can get itself out of this funk. So I think Tesla's um, intrinsic value today is about $100 per share. And that article that I published, which is my most read article, is also now at the top of our screens. So I do think there's going to be another 80% drop in Tesla stock to $100 per share. And in this article, I discuss autonomy, Tesla energy, Tesla vehicles, Q1 profit warning, which now is also being replicated by others in the Tesla bull community. People are kind of starting to come out of the woodwork about Q1 profitability. So I think it's something that people should be mindful of. On Kalshi, Tesla deliveries are forecasted to be about 363,000. So that's a very material drop, the lowest in the last couple of years. So it's going to be a rough quarter, and I think there's a chance that there's going to be a negative profit reported by Tesla in Q1. So Matt talked about how the estimates must come down quite a lot, and I think they will eventually, but we'll see. Any other questions, comments? Please request to speak. Otherwise, we can call it a day. The markets are down. Dow Jones down 1.4%, Nasdaq down 0.8, S&P 500 down 0.7, Russell 2000 down 1%. We didn't get a chance to talk about Microsoft's and Google's quantum computing announcements, but ChatGPT just announced numbers. 4 million weekly active users, up 33% from 3 months ago. 2 million paid enterprise users. This is obviously 2 orders of magnitude more than Grok. I don't know how that's going to change, but I guess we'll see. Henry?
Yeah, I just want to mention you shared that video that Kyle produced, and there was an follow-up interview by Future Aza, and they were talking about how the driving styles differ from region to region, especially like in Vietnam, China. I know for a fact that if you saw them drive like that over here, that would be considered almost road rage. But it's very common in Asia to be driving in and out, so it's very challenging, and that video really showcases um, the question: how is Tesla going to adapt to that environment? So just want to give some incentive for it's not your typical video just saying this is great, that's great, or this is great and that sucks. No, it was very neutral, very objective versus subjective.
Yeah, I mean, it's obvious that this system is better than Tesla FSD in China.
Mm.
And I think it's game over for Tesla. I don't see how FSD can take off in China with these companies throwing better systems for free on the cars that are priced half the price as Teslas. So I don't see how Tesla China is going to survive.
Yeah, I'm still confident, Yaman. I hope you respect my position. But I also hear what you're saying, and I actually see it too. I've never tested a Huawei ADAS system. The closest I've gotten was that video that you just shared, and when I saw that, it did make me feel and wonder about my investment. And this is my feeling. Some other hardcore Tesla investors may just roll their eyes and just you know go about their day, but it didn't for me. So that's why I just wanted to share that because not seeing that versus seeing it, you can maybe benefit by making any adjustments to your portfolio in terms of Tesla. And I'm not kind of advocating one way or the other. I just want, people to have the full visibility.
Yeah. Yeah, I mean, these things kind of started out um, slowly and they snowball. A lot of people obviously have, heavy investment in Tesla stock still. This is years of inertia that's going to have to change. So it's going to take some time. On the other hand, the automotive market is weakening too. So it's just really interesting to me that no biased Tesla influencer is talking about these ADAS systems from China. No biased Tesla influencer with 1 million followers are talking about BYD's LiDAR system that is now free on all BYDs, including ones that are priced less than $20,000, providing better ADAS than Tesla FSD. All these biased influencers talk about is how FSD is on the verge of being approved in China. So what if it's approved? There are better systems going for free on cars priced half. So I just think that people should be mindful of people's, these influencers' incentives to get a like, a repost by Elon or a reply. They get a few $1,000s from X to push this nonsense. And it's such a shame. It is such a shame.
Yeah, man, if I can I just kind of give you everyone some additional information about my tier one position because I felt like
It's
I
okay, Henry. I don't think people really care. I mean, as long as they know your bias direction, like your long, short, whatever, they don't
okay.
care about your exact specifics of your position.
Cool. Okay.
But thank you very much for sharing your technical analysis with us today. I'm going to read a couple of things from the Fed minutes that came out yesterday, and then we're going to call the day. So if you're not interested in macro, you can exit now. The minutes from the January's FOMC meeting was released yesterday. On balance, it confirmed that the Fed is on hold, but still leaning toward lowering the Fed funds rate some more if and when inflation falls closer to 2%. It's a dovish pause, which is supportive of both stocks and bonds. Consider a few key points as well as recent economic data. Inflation outlook. FOMC participants expressed concern that Trump 2.0 trade and immigration policies increase the risk of higher inflation. On the other hand, FOMC participants said that high January inflation should be followed by lower prints in the coming months. The balance sheet outlook. FOMC said it may pause or slow quantitative tightening due to the debt ceiling impasse and associated volatility in reserve balances. Typically, the Treasury Department's extraordinary measures involve spending down its account at the Fed, then issuing loads of Treasury bills to refill it. The first part of the scenario boosts reserves, the latter drains them rapidly and risks disrupting market functioning. Three, Treasury issuance outlook. FOMC participants also suggested that they'd like the Fed's balance sheet holdings to have shorter duration. That would align with the Treasury's current strategy of issuing more bills. Four, inflation reheating. FOMC participants should be worried about new source of inflation. Prices paid and received measures in the New York Fed's regional manufacturing PMI jumped to post-pandemic highs in February. Five, global inflation rebound. Global price pressures are also reheating. And there's some more discussion that maybe we can talk about tomorrow. All right. Thank you very much, everybody. Let's keep it to an hour. Thank you, Henry, for contributing. Thank you, Luce, for contributing today. And I will chat with you all next time. Take care.